This is Nightly Business Report with Tyler Matheson and Susie Guerin.
Global tensions, stocks slump as concerns over Europe's economy and possible escalations in Ukraine and Iraq weigh on the markets. How global turmoil could end up helping U.S. stocks and bonds.
Passe passwords. As more and more reports surface of data breaches and computer hacks, are passwords becoming a thing of the past?
And a heavy burden. Companies have drugs that might save some people's lives, but they have to say no. The difficult decisions and the reasons behind them as we continue our three-part series, Desperate Measures. All this and more for Thursday, August 7th. And good evening, everybody. I'm Tyler Matheson. Welcome.
I'm Sue Herrera, filling in tonight for Susie Guerra. Well, global concerns over positive news here in the U.S., investors choosing to focus on Europe's economy and the conflicts in Ukraine and Iraq. European Central Bank President Mario Draghi warned tensions between Russia and the West over Ukraine could threaten Europe's economy. And with Italy already officially in recession, that set a bad tone. And then reports surfaced that the U.S. may be considering air strikes against Muslim extremists in Iraq, in addition to airdrops of humanitarian aid. Should that situation escalate, markets are sure to react. That overshadowed data here, showing first-time jobless claims fell to a more than 8-year low. Stocks managed to bounce off of the lows of the day, and here's how they looked at the close. By the end of the session, the Dow was down 75 points and sitting right around a 3-month low. The Nasdaq down 20 and the S&P was off by 10.
In what's widely being interpreted as a flight to safety, the yield on the U.S. 10-year note closed at its lowest level this year. In fact, the closing yield of 2.41% is the lowest since June of 2013. German and British bond yields slid as well. Let's get some perspective on how global tensions are hitting the markets from Nick Colas. He's Chief Market Strategist at Convergex. Nick, welcome. Good to have you here.
Thanks so much.
I hear a sort of intellectual tension between individuals who say, on the one hand, the U.S. economy is pretty strong. Some of the signs are very good. Corporate earnings are good. Valuations are not overly stretched. And yet other people say the international tensions could be a real fracture point for the market in at least the short term. Where do you stand?
That's a very good summary of the tension that we hear from our institutional clients as well. There's no doubt the U.S. economy is kind of second gear moving into third gear. But the problem is Europe is still in first gear. That's a real slowdown on the global economy. And then we do have these exogenous shock potential items, both in the Ukraine and in Iraq. And let's not forget Libya as well. The good news, I think, so far is that oil prices have not yet spiked to the degree that you would see with geopolitical risk. We're still below $100 a barrel. That's good news for the U.S. consumer.
You know, Nick, to Tyler's point, it might actually make the U.S. market look more attractive, more of a safe haven, because there aren't many other places around the globe to allocate cash at this point.
That's actually quite true, and it is a bit of an anomaly, but it is accurate. If you look at Europe, for example, we still see clients interested in European equities, but they're getting more defensive because they see the European economy not gaining any traction. Same for Japan to some degree. And among the large developed markets, the U.S. then becomes one of the better places to look for value.
One of the news items today had to do with Russia identifying some of the companies and countries against which they are taking retaliatory sanctions. And many of those are food companies, agricultural companies that do a lot of business in Russia, and they're European companies, I should say. Could that further weaken Europe if one of their big markets, i.e. Russia, is foreclosed to them?
It's a tough call, and I'll tell you why. On the one hand, those sanctions are damaging to the medium-term prospects of the companies that you mentioned. On the flip side, if we're talking about sanctions, then at least we're not shooting at each other. And a hot war in the Ukraine would still be a lot worse for Europe and European equities and the European economy than the sanctions we're talking about. Sanctions can get lifted. Once you take that next step into a more full-blown conflict, it's a lot harder to unravel.
What do you make, Nick, of the drop in bond yields? That some people say is kind of the canary in the coal mine, telling us that there's something else out there that's about to change dramatically. I mean, we saw the lows today at 2.41%, but it was a global move down in yields.
That's right. I tell you, yields around the world, but particularly in the U.S., are the great anomaly of 2014. The consensus was rates would rise this year, and they have done the opposite. They have fallen on the backs of, I think, incremental concerns about geopolitics, which is very accurate, but also still a search for yield from a population that's getting older and looking for fixed income instruments. I don't expect this trend to end anytime soon.
If I'm a U.S. investor, Nick, give me two ideas on places to put my money for the next 6 months.
The two areas we like the best are U.S. technology stocks, large cap technology stocks that still have pretty good growth because of the U.S. economy, and consumer non-durables, the food and staples companies that can generate some good yield and have pricing power if we do see inflation pick up.
Two creative ideas. Nick, thank you.
Thank you.
Nick Colas with Convergex.
Some of the nation's top names reporting same-store sales for July, and they were mostly better. L Brands, formerly Limited Brands, said sales rose 6%, easily beating estimates. Gap saw its sales up 2%, and Costco posted a 5% jump, but that missed expectations. Here's a look at how those companies finished the regular trading session. And as brick-and-mortar retailers gear up for the big back-to-school shopping season, many are finding an unlikely ally as they try to lift their sales. It's called web rooming. Courtney Reagan will explain.
Video may have killed the radio star, but the web hasn't killed the retail store. In fact, recent surveys indicate it may be helping. Showrooming, or consumers browsing in-store but buying online, has driven retailers like Best Buy and Target to price match both physical and online competitors. And now the initiative may be turning the trend to web rooming instead. Shoppers browsing online but buying in-store. According to surveys from Accenture and the International Council of Shopping Centers, around 3/4 of back-to-school shoppers plan to research products online first, but will still buy goods in physical stores. Making sure the item is in stock, seeing and touching the product, and avoiding shipping costs are among the top reasons why consumers are web rooming.
Even if you're a retailer selling 5, 10, 15, 20% of your goods online, the converse of that is 80, 85, 90, 95% of your goods are still being sold in store. So the store is still very important. And what we're seeing then is online via the web rooming is having a very big influence on the in-store purchases. So you can't think about store and online as separate. You have to think about how they influence each other.
The National Retail Federation forecasts the average family with children enrolled in grades K through 12 will spend $669 on back to school this year. That's up 5% from last year. The average back to school spending for a college student is expected to rise 10% to $916. But the spending increase for both is due more to the fact that goods are pricier now and not necessarily that shoppers are buying more. Still, for stores and e-commerce alike, the fact consumers are spending is welcome news heading into the all-important second half of the year. For Nightly Business Report, I'm Courtney Reagan.
Earnings out today from two government-run mortgage giants. Profits took a plunge, but both made money. Fannie Mae made $3.7 billion over the past 3 months, its 10th straight quarterly profit. Freddie Mac took in $1.4 billion, its 11th straight profitable quarter. As part of their 2008 bailout terms, profits at both companies go to the Treasury Department as a dividend, even though both have already paid back their loans in full. And one of the biggest complaints in the housing market today is that there's simply not enough out there to buy. Sellers are either underwater and staying put, or they're waiting for prices to go higher. But something else is adding to the lack of listings, and our real estate correspondent, Diana Olick, explained.
We should sit outside. Shelley and Keon Burley are loving their new home in suburban Baltimore. It is 4 times the size of their last home in the heart of the city, the home they are now renting out.
It really wasn't worth it to take that $30,000 hit when we could get someone to rent the property, have them pay down the mortgage, and get to a place where we could either get out for the same price or eventually maybe even make a profit off of it if we rent long enough.
$30,000, that's how far underwater they were on the downtown home's mortgage. Rather than take the hit, they took the rent, like so many others are doing across the country.
Now, as people are starting to move and to sell, individuals, they're also turning into landlords by choice. And that is definitely having a dent in the inventory numbers.
The supply of homes for sale is finally starting to rise, but it is still tight, which is pushing home prices higher. Rents are also rising, and that was enough to convince the Burleys that being landlords is worth it.
They put it on Craigslist and had people responding to the ad instantly.
I was probably more stressed than my wife.
3 months later, they agree it was the right choice, even after putting 20% down on the new house and now carrying 2 mortgages.
We just cut out all the non-essentials, and we were able to stockpile the down payment quicker so we could move out and move into this lovely home.
The Burleys kept their old home because they were underwater.
But others are choosing to become landlords for just the opposite reason. They've gained so much equity in their homes recently that they can use that to buy a new home and still earn rental income on top of that.
Some of them are all cash. Our agents are seeing a lot of people come through their door with the cash in hand to buy that next place. A lot of them obviously don't need that equity in their former home, or they're able to tap some of it out and then use it to buy the next place.
You want me to look up movie times?
Whatever the case, Richardson says the trend is growing and in turn shrinking the supply needed to keep the recovery in home sales going strong. For Nightly Business Report, I'm Diana Olick in Washington.
Coming up, if you're like many of us, you probably have several passwords for your various online accounts. But with security an ever-increasing concern, is the era of the password dead? Facebook is looking to make your personal online information more secure. The social networking giant is buying a company called Private Core, which helps protect computers and data centers that power internet services from hackers and harmful spyware. No terms of the deal were disclosed.
Securing data on the internet may be more important than ever, especially after Russian hackers stole more than 1 billion confidential usernames and passwords off thousands of websites. That's raising questions about whether the era of the computer password may be over. Eamon Javers joins us now with more from Washington. Are passwords passé, Eamon?
Yeah, absolutely, Tyler. Passwords are maybe about to be a thing of the past. There's a major cybersecurity conference going on in Las Vegas right now called Black Hat and DEF CON, and the big topic of conversation there is what happens after the password? How are we going to get consumers to the point where they don't have to remember 5 or 6 extremely complicated passwords with capital letters, numbers, all those things that keep us so confused all the time as computer users? A couple of things that are on the table for discussion. One is websites that don't require a password, but instead will simply send you an email. So you go to the website, and instead of typing in that password, you say, I'd like to log in. It sends you an email to your email address, and if you click on that email, it assumes that it's in fact you. Another one is wearable tech, a bracelet or some kind of wearable device that when you bring it in proximity with your device, it will know that it's you and let you log in without a password. A lot of that work is already being done. There are thumbprint analysis devices out there right now, and there's even an Android app which will allow you to log into your Android device if you simply got your Bluetooth and your Wi-Fi on and you're in proximity of that Android device. It assumes, again, based on the accumulation of the other devices, that it's really you and lets you in without a password.
You know, passwords we know have their problems, Eamon, but do any of the methods that you just outlined for us have their own separate issues?
Yeah, they do. I mean, one of the big problems with biometrics that you hear people talk about is when you think about using a thumbprint as your password, which some people are advocating, that one downside to that is that if your thumbprint is compromised, it's awfully hard to get a new one, right? You can always get a new password. It's very tough to get a new thumbprint, right? So when you think about an iris scan for your eye or a thumbprint, those are some of the challenges they have to work through. And some of this is going to be done by behavioral analytics, that is, analyzing your activity once you're inside the system to make sure that it really is you. Is your device located in your house or your work or the places you usually are? Are you logging in at the times of day that you normally log in and doing the types of things you normally do? All that behavioral monitoring will say, hey, wait a second, if somebody in Kazakhstan just logged in as me, it's probably not me.
All right, hey, that would be true in my case.
Right.
Eamon Javers, thank you very much.
You bet.
Mixed results from the I network is where we begin tonight's market focus. CBS posted earnings that topped estimates, but revenue came in short as the media giant took a hit because it lost the rights to broadcast the NCAA college basketball semifinals. Despite that, CBS is doubling its share buyback program to $6 billion and increasing its dividend to 15 cents per share. Shares fell initially after that report. During the regular trading session, the stock was off 1% to $56.90. News Corp out with weaker than expected fourth quarter earnings after the bell. The publisher of the Wall Street Journal said revenue came in a bit above forecasts, but the number was down from last year as advertising sales were weak. Shares didn't move much after the report. During the regular day, the stock was down nearly 1% to $17.01. And generic drug maker Mylan missed earnings estimates, with revenue falling short as well. The company also cut its earnings guidance for the current quarter, blaming higher expenses and delays in FDA approval for key products. That sent shares down about 3% to $46.49.
Watch out, Amazon, maybe. Google and Barnes & Noble are joining forces to deliver books. Starting today, book buyers in a few locations will be able to get same-day deliveries from local Barnes & Noble stores through what's known as Google Shopping Express. The partnership could help Barnes & Noble build an online presence since its brick-and-mortar business has struggled. Class A shares of Google were off slightly at $571.81. Barnes & Noble 2.5% higher at $21.75. Wendy's served up second quarter earnings that more than doubled. The fast food chain continued to benefit from the sale of some of its restaurants, and the company said it's going to continue the strategy and offer up more of its franchises. To top it all off, the special sauce is that the company reaffirmed its guidance. Shares up 2% to a big $8.15. Shares of Zynga tanked right after it reported late disappointing results. The social gaming company announced weaker than expected revenue as it is struggling to increase users. Also, its guidance was significantly short of the estimates. After hours, the stock initially plunged. You can see it dive right there. During the regular session, shares were higher by 4.5% to $2.92.
Well, despite some isolated heavy rains last week, there has been no substantial relief for the portion of the country mired in a multi-year drought. In fact, the Department of Agriculture's weekly drought monitor shows 1/3 of the nation is considered under moderate to severe drought. And as you can see, the western and southern plain states are hit particularly hard. And the 3-year drought in California is now officially the worst on record for that state. But as Josh Lipton tells us now, some growers and utilities are turning to where else for help but Silicon Valley.
From residential use to agriculture, the water worry is on in California.
It's a huge concern.
Lise Aizmont is the director of grower relations for the Francis Ford Coppola Winery in Geyserville, California. She says if the 3-year drought turns into a 4- or 5-year drought, there will be problems.
It could be a compounding issue for us that could keep continuing on, and if that should happen, perhaps in a couple years, we would really see the impact on wine grapes.
That's why she's teamed up with tech startup Teravion. The company flies planes over farmland and gives growers thermal images like these that can show farmers potential trouble spots when it comes to irrigation.
After having that technology, we've been able to fine-tune it so finely that now we have so much more confidence and comfort in how we irrigate. It's changed everything for us.
The startup now has about 100 customers and says demand for its service is strong.
We see a lot of interest from growers because of the drought, and it definitely helps them find irrigation leaks and manage water more effectively.
But it's not just on the farm where tech startups and big-name investors are hoping to help when it comes to this water crisis.
The monthly's good when you track where to go.
WaterSmart Software is one of those startups which has received funding from the likes of the Wesley Group and Menlo Ventures.
So this is a home water report.
The company works with water utilities to supply detailed information to customers on water use, showing how much water one home may be using versus another of the same size.
You can in some ways think of WaterSmart as a virtual reservoir. As people are prompted through the social comparison approach to use less water to improve their water efficiency, you're effectively creating more reserves in the reservoir for other people to use.
And as this water crisis continues, more help from Silicon Valley may be on the way.
As our water resources are squeezed, we're going to see more interest from investors and entrepreneurs. I think that's a good thing. The challenge is, is it going to be too late?
This drought has already cost the state of California some $2 billion and 17,000 jobs. But startups like Turavion and WaterSmart Software are hoping to ease this water crisis. Josh Lipton, Nightly Business Report, Geyserville, California.
Up next, why companies with potentially life-saving drugs have to turn away people who desperately need them.
Tonight in the second in our three-part series, Desperate Measures, on the challenges terminally ill patients and their families face when treatment options run out. And the only thing left to try is experimental drugs. But drug makers often won't allow new, unproven medications to be used, citing risks to the patient and to the drug companies themselves. Meg Terrell has the story.
2 years into her battle with a rare form of cancer, Natalie Trawler and her family think they may be close to something that could help.
When we found this new promising medicine, PD-1, we definitely wanted to participate in the trial.
PD-1 is part of a new class of experimental drugs called immunotherapies. The Trawlers and their oncologists have asked makers Genentech, Bristol-Myers Squibb, and Merck for access. They've all said no.
It was only including people 18 and up, and since I'm only 15, they wouldn't let me in, and we asked for compassionate use, but they denied it.
Compassionate use is a way for companies to provide experimental drugs outside of clinical trials for patients with no other options. Natalie and countless others fit that description. But for drug companies, it's a complicated issue.
It's an agonizing process to go through.
Doug Williams leads research and development at Biogen IDEC. 2 years ago, the company was working on a therapy for Lou Gehrig's disease. With compassionate use requests pouring in, Biogen prepared enough supply to give 5,000 patients, if the drug proved to work in clinical trials.
An individual situation, while difficult and heart-wrenching, has to be weighed against the backdrop of what the ultimate goal is, which is to try to bring these drugs to market to treat the broadest cross-section of the population as quickly as we can possibly do it.
There are risks for both patients and drug makers. Natalie's doctor worries about the safety of an unproven medicine.
These drugs are not benign. I certainly have concerns about potentially using a medication that we have no information on, because the side effects can be very serious, potentially life-threatening.
The companies also worry about side effects. Bioethicist Art Kaplan has advised drug makers on compassionate use.
The people who take experimental drugs often are really, really sick. The odds of them getting better are tiny. It happens, but it's rare.
And there's a concern that a bad outcome in a patient much sicker than others could affect a drug's chances of approval. Another factor companies must consider: supply.
They might have as much as a tiny thimble full of that drug. If they give it to a dying person, they can't complete the trials that the FDA wants them to do to get their drug out in the market to give to anybody who has this disease.
Companies also cite not having enough data in different forms of cancer, including in kids, an issue that has set Natalie back. There are also ethical considerations.
Who do you say yes to? Who do you say no to?
Companies say that making a drug available through compassionate use could deter patients from enrolling in clinical trials, where they risk getting a placebo, potentially slowing a drug's path to market. And there's always a concern a drug won't work. Biogen's compound for Lou Gehrig's disease ultimately failed.
They're not real drugs yet. We want to take them from a situation where it's just hope to being real hope for patients. And we want to prove if something is actually false hope.
For a patient like Natalie, the proof may not come soon enough.
Complicated questions. Meg Terrell joins us now with more. Meg, whether a patient is involved with a compassionate use exception or involved in an experimental trial, How do the companies handle legal liability there? If I'm enrolling in one of these things or taking one of these drugs, do I basically absolve the drug company of any liability?
Yeah, it's complicated, and there are fears about that, of course. But talking with Nathan Trawler, Natalie's dad, he says as a parent, you read through each line of these consent forms, and you don't hold anybody accountable. You don't hold anybody liable if something goes wrong. So, you know, it's a scary thing, and there can be side effects to these drugs. But another thing that companies consider is not just the liability issue, but does a bad outcome in somebody who might be much sicker than other patients kind of disrupt an entire clinical trial program? Some companies say, you know, if there are any side effects, of course we want to know about them. But other folks say, well, wait, could that be a concern? Could that slow down the enrollment in a clinical trial or the FDA's evaluation of the clinical trial results? So these are all concerns.
You know, so many people in your piece and out there are so vested in finding treatments, all the way down to Natalie's physician, Laura Davis, who you said shaved her head.
Yeah, she has short hair in support of kids' cancer research, St. Baldrick's.
Which is amazing. And you look at the commitment that all of these scientists and all of these physicians have. Are there changes being put in place to the system to make it more workable, or is that not an option?
There's a lot of pressure building on the system to change, something that I learned. There have been laws discussed in several states called Right to Try. There's conflicting views on whether those will actually help the system, which we explore actually in another piece I think you'll be airing tomorrow. But also there's questions about, is there enough communication between the FDA and companies? Does the FDA know what's going on? And could there be a way of having a two-track system for companies so that they can provide compassionate use, but also run their clinical trial program. And if something goes wrong in one end, it won't affect the other necessarily.
All right, Meg, terrific series. We look forward to the third installment.
Thanks.
And for more on Meg's series about compassionate use, please go to our website, nbr.com. And that will do it for Nightly Business Report for tonight. I'm Sue Herrera in for Susie Guerra. Thanks for joining us.
And thanks from me as well. I'm Tyler Mathisen. Have a great evening, everyone. I hope to see you right back here tomorrow night. I'm Tyler Mathisen with a Nightly Business Report news brief. Stocks began the day higher after first-time jobless claims fell to a more than 8-year low last week. But everything changed after the head of the European Central Bank warned that tensions between Russia and Ukraine could threaten Europe's economy, and there were reports that the U.S. might be considering airstrikes against Muslim extremists in Iraq, in addition to airdrops of food. Stocks managed to bounce off the lows of the day, but at the end of the day, the Dow was still down 75, NASDAQ off 20, S&P down 10. Same-store sales coming in with strong results from the Gap, Costco, and Victoria's Secret. Facebook is buying a company that protects computers and internet data centers from hackers and harmful spyware. And tune in to Nightly Business Report here on your public television station.